What's up, everybody? Welcome back to my channel. Today we are going to be talking about something that is crucial for nonprofit executive directors, and that is financial management, kind of what we talk about often. However, this video we're putting a spin on things, and we're going to go over a few things that nonprofit organizations can actually learn from for-profit companies. And so if you're interested in improving how you run your organization from a fiscal standpoint, or if you're interested in making some upgrades, then you'll want to stay tuned. So the first thing we're going to talk about is financial transparency and reporting. While nonprofits are typically reporting up into a board, in the for-profit world, these companies have what you call like stakeholders. When you think of the two, both have an interest in the company. Now, from a nonprofit standpoint, because the organization is publicly owned, right, there's no like one owner, there is an onus on the organization to be transparent about where these donated funds are going. You know, when they're receiving grants, right? How are you actually reporting on whether or not it was spent as it was supposed to be spent? Is your financial reporting actually showing, you know, where money has gone, the causes that you have supported, the programmatic, right, thrust that you've actually supported? Similarly to for-profit entities, they're reporting usually on profitability, right, and what got them there or didn't. And so I want to talk about some parallels that we should be considering. So one, under this whole financial transparency and reporting piece, we want to talk about clear, standardized reporting. A lot of these for-profit companies, they can't forego having financial reporting. They can't forego like not closing their books. When I worked at Ernst & Young years ago, we audited businesses rather, that had to actually report to stakeholders, had to report to the SEC, right, on their financials. So there was no like, oh, we didn't close the books this month, or no, like, and if they didn't, that was something that we were actually going to ding them for, because that is a problem, right? Because leadership can't lead the business. They can't make sound decisions if they don't know what the numbers are even saying, right? And there are people who invest in these companies, they're putting money into these companies, and they're expecting a return. And as such, these organizations are required to report on what's happening. That same importance needs to be placed on financials and financial reporting in the nonprofit space as well, because a lot of times donors or funders, they're not going to give you money if they don't know what's happening. They can't see what's going on. And so by implementing a sound and streamlined financial reporting process, right, that one makes sure that your financial reporting is consistent, but that also signals to donors, funders, right, that there is a process in place where management and leadership are actually reviewing the numbers. There's discussion happening, right? There's decisions being made based off of these numbers, right? And so in the for-profit sector, the financial reporting follows, you know, clear, consistent standard, right? And that's a gap. Nonprofits should be following as well, right? And so you can mirror this practice by also adopting standard financial reports, right? And so for us, right, in the nonprofit world, that'd be your statement of activities, your statement of financial position, your statement of cash flows, your statement of functional expenses. And that's the basics, right? That's what we call just your basic reporting. We haven't even gotten into what the management reporting should look like, right? Like those detailed reports that management need to be looking at. But on a consistent basis, at the very least, those financial reports should be reviewed by management, right? And they should be presented in a way that makes it easy for leadership and your board to understand. Next, under this financial transparency and reporting point, we also want to talk about quarterly and monthly financial updates, right? So when we talked about consistent financial reporting, now we're talking about what that timeliness even looks like, right? So management absolutely should be looking at things monthly, and the board at the very least should be looking at these things quarterly. Typically for-profit companies are having regular updates to their stakeholders about their financial status, right? And sometimes it's through like quarterly earning reports. They might be providing their executive leadership with monthly financials, whether it be like a dashboard or some sort of presentation. Nonprofits can adopt this same process, right, by providing detailed updates to both board members, whether that be quarterly, and then also to executives on a monthly basis. That needs to also then be streamlined, right? So once you know who your audience is, so when you're talking about, for example, your board reporting, Once you know who your audience is, the type of information that they need, what they need to go through in order to be able to support you, right? Give you feedback, help you make decisions, then you can tailor the report appropriately. And then you stay consistent with that report. Same goes for management. When we typically bring on a new client and we're talking with them about the type of information that they need to be seeing, we're crafting then a financial reporting package that consists of that level of detail, so that when you get it, you can take it back to, your executive team and y'all can talk about what's going in the organization and how you make decisions then based off of this data. Lastly, under this financial transparency and reporting is going to be annual financial reports that have a narrative. So similarly to how nonprofits send out these end of the year updates to like their donors and their supporters that kind of indicates like what the nonprofit accomplished over the year. It's similar to that, but it is much more focused on the financial story of the organization, right? And so in the for-profit world, those annual financials are typically inclusive of some sort of like investor letter or narrative. We want to do the same, right? We want to explain the context behind the numbers. We want to lean in on whether there were market conditions that affected our performance, right? We want to talk about if there were strategic shifts that you had to take this year, how so and why, right? By adopting this approach, you also help the users or the readers of the financials understand the challenges that you've experienced. It helps to understand the goals of the organizations, right? And it just gives a deeper understanding as to the numbers and where the organization stands. When I think about when I was working at EY, a lot of these things were required. It wasn't a nice to have. And I find that a more easeful approach is taken to financial reporting in the nonprofit space because there's so much emphasis placed on doing the actual work, right? Supporting the community, right? Delivering on your programs. But you have to remember, your ability to do that though is dependent on the funding, right? It's dependent on the financial transparency and reporting that you have, because it's almost like a wheel, right? Unless you have that, you can't do this. And the more you're doing this and that wheel keeps going, the more you're able to support the programs and do those things on this side. And so don't forget that. So the second thing that nonprofits can take from the for-profit world is innovation, right? Financial technology and innovation. I find that we in the nonprofit space tend to lag behind as it relates to like adopting new technology, right? And so a lot of times things are still being done very manually. It's very time intensive. And one of the things that I think that the for-profit entities have over nonprofits is that they're quick to jump on these things, right? And again, this is not an everyone scenario, right? I'm sure there are some for-profit companies that are slow, but we're not talking about them. When we think about financial technology and innovation, it helps to improve accuracy, efficiency. It helps to speed things along, right? It helps also to build credibility with like your funders and your donors, right? Because they see that while you of course want to stay true to your mission, you're also making efficacy a pillar, right? It's of importance to you, making sure that you do things, timely, making sure you're not lagging behind, making sure that you are caught up with what's going on in the world and where the world is moving, right? And so let's go through some practices that you want to adopt under this umbrella of financial technology and innovation. So the first being cloud-based accounting software. That is bottom line the base, right? We have talked about that ad nauseum, right, on this channel, right? And so I won't chew your ear off about that, but at the very least, you should be using cloud-based accounting software. But then if you're already doing that, we want to talk about leveling that up a little bit. And the next thing that you can implement are some sort of like financial dashboards and analytics, right? So it's kind of taking that information that you have in that accounting software and then creating data that you can then use and read and make decisions with, right? And so typically for-profit businesses are using dashboards to track things like key financial metrics, revenue growth, profitability, things that are important to them based off of their goals. We should do the same. Now, the goal may be different, right? The goals may be different, or the reasons we might want to use the dashboard may be different, but that's not to say we shouldn't have one, right? It could be tracking things like your fundraising goals, donor retention, right? Budget to actuals. And so you want to also be utilizing these dashboards, but you just might be using them for a different reason. And the next is automation. On the for-profit side, they're usually automating routine financial tasks. We can do the same. I'll say while the why behind things might be different, we have very similar, if not the same, type of routine financial tasks, right? A lot of what we were doing in the for-profit world when we were closing the books is very similar to what we do in the nonprofit world. And so a lot of those things can be automated, and it also then gives you time back, right, during your close period to dig into things. When you're presenting to your board and your executive management, right, you can dive deeper if you're not spending all of this time on doing all of the little things that can be automated, right? And so we're talking about things like invoicing, we're talking about things like approvals, payroll, right? Expensify, Zapier, which is not necessarily specific to finances, but just how you run your organization, and being able to connect tools that don't speak, right? And being able to just reduce the level of human action or work that has to be done, and supplementing that with like a tool or system. I think introducing your organization to tools that are available to nonprofits, a lot of times too, you can get them discounted, right? But it'll also show the importance of being able to adapt new ways of doing things that can improve the way you work, and also honestly lighten the load of those that you have working, because no secret, you're often short-staffed, right? People are super overworked, and so if there can be a tool or something that helps them to do their job better, why not implement it? Now, the last thing I want to talk about in relation to what nonprofits can adopt is revenue generation, kind of coupled with fundraising strategies, right? We're in a world now where things seem quite a bit uncertain, right? And so I think that it is very important for organizations to be thinking about their revenue mix, where their money is coming from, and what they can do to either become a little bit more self-sufficient, and how they can supplement some of that income, right? And so some for-profit, practices to adopt immediately, like right off the dome, is like diversified revenue. Typically in the for-profit world, revenue is coming from multiple sources. In the nonprofit world, I'm not saying I don't see that often. There are a lot of organizations who are heavily funded in one way, right? Like there is one type of revenue that makes up the majority of their income, and such, if they lost that stream, it could be detrimental to the organization, right? And so you want to think about ways that you can either add to your revenue mix, or maybe even if there's one that's not even really generating much revenue, you can supplement that with something else, right? And so some things you want to think about is, if you're super heavily grant funded, do you have a monthly monthly giving program, right? Have you thought about tapping into corporate sponsorships and partnerships, right? For-profit companies are good with those subscription models, which I guess could be similar to monthly giving, but then also earned income. This is one that I've seen clients leaning heavily into this year. You can do the same by creating if you're have merchandise, like selling a little store and selling merchandise on your website, right? We have organizations that give classes, right? There's a organization that provides support and care to postpartum moms, but then they also on the other side they support doulas and provide classes with people to get certified, right? And that comes at a cost, but that is solely run by the organization. No one is funding that, right? Like the organization runs it, the people who attend have to pay. That's earned income to the organization, but still very much related to their mission and supports the work that they do. And so I think it's important to think about how your organization could be diversifying revenue, especially given that at any point something could change that significantly alters your ability to get funding, alters your ability to go after certain funding, right? And so you don't want to be stuck with your hands tied behind your back in that way. That's something that I think should be revisited quite often when you're doing your annual budgeting process, thinking about new ways to bring in money, because that's what these for-profit companies are doing, and I'd say that served them well. I'm not gonna go in a little too much, but I hope that this was helpful. If there's any tool or any point that you want me to go in detail about more, or you have questions, please leave it in the comments. I love interacting with you guys, talking with you guys, getting video suggestions from you guys, and then being able to go back and use that as part of our plan. Please share it with another executive director that this video would benefit. And if not, that's okay too. I will see you guys in the next video.